Hello dear students, how are you all? I expect that you all are very well. Myself, CA Utkersh Swadia. I am cost accountant medalist, accounting technician, MCom, MPhil and PhD scholar. Now, before starting with my lecture, I wish to communicate you about my few expectations. Expectation number 1. Your 100% involvement is required in the lecture. Expectation number 2. You can ask me maximum queries. Expectation number 3. If I may ask you the question, then it is your responsibility to give me the answer. Okay. As you know that group number 1 of CA Intermediate includes various papers, out of which paper number 1 of group number 1, that is known as accounting. In accounting, chapter number 4 is very important, and that is financial statements of companies. Okay, sir. What is the meaning of financial statements of companies? Let us cover up introduction to financial statements of companies. In the modern age, the major part of trade and industry is carried on by joint stock companies. Now the question is that what is the meaning of joint stock company? You can give the answer. Perfectly right. Very good, Jai. Joint stock company can be private company or public company. But I wish to communicate the perfect definition of joint stock company. Let us check. A joint stock company is a business entity in which shares of the company stock can be bought and sold by shareholders. Each shareholder owns company stock in proportion evidenced by their shares. Okay, now you are very much clear about what is the meaning of joint stock company. Let us go ahead. As you know that shareholders are very much interested to know about the proper utilization of their money involved in the company, and hence the companies are compelled by laws to publish their annual accounts before the shareholders to show how they have managed people's money. Okay, sir. This is nothing but the true and fair view of statement of affairs. The company is responsible to communicate the perfect utilization of the money worth. Those money worth invested by various stakeholders in the company. According to Companies Act, it is made compulsory for all the companies to publish their annual accounts. Now the question is that the companies are required to maintain books of accounts and publish their annual accounts. But in which form? Is there any statutory format? Is there any statutory forms demanded by Companies Act? There are various questions. Let us check. In India, the forms of balance sheet and P&L statement are given in the Schedule 3 to the Companies Act 2013. So we are very much familiar about the conventional financial statements of sole proprietorship, partnership, that is trading account, P&L account and balance sheet. No, but for the purpose of company, it is mandatory to prepare balance sheet and P&L statement as per Schedule 3 to the Companies Act 2013. Previously, in Companies Act 1956, there were 16 schedules. There were 16 schedules. And out of 16 schedules, Schedule 6 was of financial statements. How to prepare financial statements. But now, in Companies Act 2013, there are 7 schedules. Means not 16. Now there are 7 schedules. And out of 7 schedules, Schedule 3 is nothing but denotes that how to prepare balance sheet and P&L statement as required by Companies Act 2013. Okay, sir. So all the companies are required to prepare balance sheet and P&L statement in that forms only? Answer is yes. Part 1 of Schedule 3. I am repeating, Part 1 of Schedule 3. That is nothing but balance sheet. And Part 2 of Schedule 3. That is nothing but P&L statement. Unit number 1 of chapter number 4 is preparation of final accounts. In the simple language, I can say that it is nothing but final accounts of companies. Let us focus on this chapter. As per Section 2, Subsection 40 of Companies Act 2013, following are to be included in financial statement. Balance sheet, to know about financial position of the company. Means to know about the true valuation of assets and liabilities of company as at, means as on the specific day. Number 2, that is P&L statement. P&L statement, to know about earning capacity of company. Number 3, that is very popular, cash flow statement. To know about liquidity of the company. A few exceptions. Cash flow statement is mandatory for all level 1 enterprises. I will cover later on whenever we will learn cash flow chapter, that what is the meaning of level 1 enterprise. But right now I am giving you the brief of this exception. This brief of the exception of cash flow statement means which entities are not included in level 1 enterprise. Okay. For small and medium sized enterprise, cash flow statement is not mandatory to prepare. So here it is given that cash flow statement is mandatory for all the companies but may not include, means it is not compulsory for 1-person company, small company and dormant company. I will give you the perfect meaning of 1-person company, small company and dormant company for your knowledge. But now let us go ahead. 4th one, that is included in the financial statement. That is a statement of changes in equity if applicable to the companies in specific accounting period. Any explanatory note annexed to or forming part of. Now, in case of Schedule 3, this is a wonderful point. If company wants to disclose something or company wants to calculate in detail, certain elements or certain computations would be done, then such kind of computations or disclosure requirements will not be shown in the balance sheet or P&L statement, but separate notes shall be prepared. So the purpose of Schedule 3 is nothing but to maintain the transparency, to prevent the fraud, scam, errors, etc. And stakeholders have right to know about the true and fair informations of the company. In short, it should give a true and fair view of the state of affairs of company as at the end of financial year. This is nothing but the purpose of Schedule 3. Now the question is that, sir, what is the meaning of one-person company? Section 2, subsection 62 says that one-person company means a company which has only one person as a member. Are you clear? Nice. Now the question is that, what is the meaning of small company? Section 2, subsection 85 says that small company means a company other than a public company. Very most important, other than public company. Number 1, paid up capital of which does not exceeds 50 lakhs or such higher amount as may be prescribed, which should not be more than 5 crores. Or number 2, turnover of which as per its last profit and loss does not exceeds 2 crores or such higher amount as may be prescribed, which should not be more than 20 crores. Okay, sir. Sir, what is the meaning of dormant company? Inactive company. In short, dormant company is inactive company. Let us check in detail definition of dormant company. As per section 455, where a company is formed and registered under this act for a future project or to hold an asset or intellectual property and has no significant no significant accounting transaction. Such a company or an inactive company. I told that simple meaning of dormant company is inactive company. Okay. Or an inactive company may make an application to the registrar in such a manner as may be prescribed for obtaining the status of a dormant company. Let us check provisions applicable. First one, specific act is applicable to any company if specific act is applicable to any company, like insurance company. Insurance company has separate act, or banking company, or electricity company. Now the question is that, what is the meaning of this, sir? Separate act means insurance company has its separate act, and in that act specific format is given, means the format regarding financial statement is prescribed. If there will be separate act of company plus the format of financial statements may be prescribed in that separate act, then for those companies Schedule 3 will not be applicable. So for insurance company, Schedule 3 will not be applicable. Sir, for banking company has also separate act, and in that separate act also the separate format has been given for financial statements for banking. So for banking company also Schedule 3 will not be applied. Okay sir, then the same answer will be of such kind of electricity companies. Answer is no. Electricity company has separate act. That is right. Electricity Act 2003. But in that act, specific format of financial statements is not given, is not prescribed. Then Schedule 3 will be applicable to such kind of companies. Means for electricity companies, Schedule 3 is to be applied. Although electricity company has separate act, but electricity company has not prescribed the format regarding financial statements. Okay, sir. Any other class of company for which a form of balance sheet or profit and loss statement has been prescribed under the act governing such class of company. In short, if there may be any separate act of company and in that act separately given that the format should be applicable likewise given in the specific act, then Schedule 3 will not be applicable to those companies. But if any company has separate act but financial statements, means format of financial statements, may not be prescribed in that act, then Schedule 3 will be applicable to those companies. Sir, if there is no separate act applicable to any company, okay, and hence no separate format will be prescribed in that company, okay, so such kind of companies shall be known as all other companies. So for all other companies, balance sheet must be prepared as per Part 1 of Schedule 3, and statement of profit and loss must be prepared as per Part 2 of Schedule 3. Okay, sir. Quite enough. Perfect, perfect, perfect. Now, what kind of points to be kept in the mind while preparing final accounts? Number 1, all the requirements of Schedule 3 to the Companies Act, including disclosure requirements. Number 2, any other statutory requirements as demanded by statute, means as demanded by Act. accounting standards, but obvious accounting standards must be considered at the time of preparing final accounts of companies. This kind of accounting standards notified by MCA, means Ministry of Corporate Affairs. Accounting Standard 1 to Accounting Standard 29. Statements and guidance notes issued by Institute of Chartered Accountants of India, which are necessary for understanding the accounting treatment or valuation or disclosure suggested by the ICAI. Okay, sir. Quite enough. And we are very much clear. Now, what is the requirement of Section 133? As per Section 133 of Companies Act, it is compulsory, means it is mandatory to comply with accounting standards notified by the central government from time to time. Okay, sir. Now, what is the requirement of Section 128 of Companies Act 2013? As per Section 128, every company should prepare and keep at its registered office books of account and other relevant books and papers and financial statement for every financial year. I am repeating, every financial year, which give a true and fair view of state of affairs of the company, including that of its branch office or offices if any. This is the company's obligation to maintain the books of accounts at safe place. Let us check requirement of Section 92. As per Section 92 of the Companies Act 2013, every company should prepare an annual return in the form prescribed by the Companies Act 2013. Sir, what is the requirement of sign, means signature? It is signed by a director and the company secretary, or where there is no company secretary, then by company secretary in practice. Let us cover annexure, that is of Schedule 3 of Companies Act 2013. First of all, we will focus on Part 1, means balance sheet. This is nothing but Part 1 of Schedule 3 to the Companies Act 2013. This is statutory format. Mind well, this is statutory format. Means sequence must be maintained. Okay, sir. How to prepare balance sheet as per Schedule 3, Part 1? Then there will be, first of all, the name of company. If the name of company is like this, Riddhi Limited, then the company has to disclose the name of the company, first of all, under the head of balance sheet, and thereafter the company should denote balance sheet as at, means of specific closing reporting date. Rupees will be disclosed. Sir, how many columns will be covered in Part 1 of the Schedule 3? Then there are 4 columns. First one, that is particular. Second one, note number. This is note number, means this is explanatory notes. Thereafter, current year's data. Means current year means closing reporting date. and previous year data. It means previous year's last day's situation of asset and liability. This balance sheet is divided into two parts. First one, that is equity and liabilities. Second one, that is assets. Now, I am going to give you Guru Mantra. You will consider like this: the ratio of balance sheet is 4:2. Means ratio of balance sheet means balance sheet is divided into two parts, that is equity and liabilities and assets. But under the head of equity and liabilities, there are 4 headings, and under the heading of assets, there are 2 classifications, 2 headings. So the ratio will be 4:2. Now, sir, kindly tell us what will be the items of equity and liabilities. Means major 4 headings and inner components. First one in the equity and liabilities, shareholders funds. Under the head of shareholders funds, first one, share capital. I will cover later on the detailing of each subcomponent. Second one, reserve and surplus. This is not the rigid note number. Like that, share capital, if share capital, then note number 1. In note number 1, explanation will be given. It is not like that. Or number 2, that is rigid, only for reserve and surplus. No. In the practical circumstance, even after a balance sheet, under the head of particulars, it may be written that disclosure of accounting policies, number 1. Changes in accounting policies, number 2. Means informative notes. And thereafter, share capital, note number 3. This is a practical life. That is 1, 2, 3. Then in that circumstance, as against share capital, note number will be 3, not 1. Various companies may use like this also. 1.1, 1.2, 1.3, 1.4. This is academic purpose. In the question, informative. In practical life, it is possible that the changes in accounting policies, disclosure of accounting policies, etc. are available. But in academic purpose, it may not be given that this kind of accounting policy is applicable to this company, or this kind of changes in accounting policies as applied to the companies. Then in academics, there is no requirement to disclose such kind of notes to accounts. So for academics, if the company is of having share capital, then notes to account will be started from note number 1. But if any company may not have any kind of share capital, then we can say that note number regarding balance sheet is to be started from reserve and surplus. And as against reserve and surplus, the number will be given as 1 for the purpose of notes to accounts. So mind well, these notes numbers are not rigid one, not fixed schedule, not fixed number. Another question, sir, why current year's data and previous year's data will be mandatory for any company to disclose the balance sheet? The reason is very simple. Stakeholders can compare previous year data and current year data, and accordingly they can take the decision of investing or financing, etc. Okay, sir. Now, third element under the head of shareholder funds is money received against share warrants. Okay, I will cover each and every element in detail. I will give you the details of each and every element. Don't worry. Right now, I am covering all the elements. Means it is nothing but quick view, summarize manner. Sir, what is the next one? Now, second main heading of equity and liabilities is nothing but share application, money pending allotment. Mind well, I told you that Guru Mantra 4:2. 4 main headings of equity and liabilities and 2 main headings of assets. Out of 4 headings of equity and liabilities, second one is share application, money pending allotment. Third main heading of equity and liabilities, that is non-current liabilities. Non-current liabilities are such liabilities which are going to settle after 12 months. Which are going to settle after 12 months of closing reporting date. Closing reporting date means closing balance sheet date. The first one is long-term borrowings. Borrowings which are expected to pay after 12 months of closing reporting date. So examples of long-term borrowings, very easy. Bank loan, debentures, public deposit. Whether borrowings may be secured or unsecured, but borrowings must be long-term borrowings if we wish to note those kind of borrowings in notes to accounts of long-term borrowings. Second one is deferred tax liabilities. Explanation of deferred tax liabilities is given in Accounting Standard 22. I will cover the detailing of deferred tax liabilities, but afterwards, whenever I will teach you P&L statement. So what is the next one? Other long-term liabilities. Other long-term liabilities means liabilities for more than 12 months, but not be suited as long-term borrowings, deferred tax liabilities, and long-term provisions. Then such kind of long-term liabilities shall be treated as other long-term liabilities. Next will be coming long-term provisions. Long-term provisions for employees. Gratuity fund, for example. Sir, what is the next heading? Very simple, current liabilities. Sir, under the head of current liabilities, various elements are to be covered. Sir, what is the meaning of current liabilities? Very easy. Current liabilities are liabilities which are expected to settle within 12 months of closing reporting date. Very simple. Okay, sir. Under the heading of current liabilities, what will be the next? First one, short-term borrowings like bank overdraft, cash credit, working capital loans. Sir, the company has only and only 5 lakhs rupees balance with bank, but wish to withdraw more than 5 lakhs. Then the facility given by bank to company known as bank overdraft. Sir, but the company is very prestigious and financial institute may give certain kind of amount as loan to such company, but for short-term purpose, then it is known as cash credit. So there are various kind of routine expenses which have to pay by company. Then for that purpose, any kind of borrowings will be available. Yes, the company can borrow. Then such kind of borrowings will be known as working capital loans. Okay, bank overdraft, cash credit, and working capital loans are short-term borrowings. What is the next one, sir? Trade payables, creditors for goods. If the company is manufacturing company, then creditors for goods. But sir, the specific terminology we wish to know, then trade payables means creditors for goods and services, but which are expected to settle within 12 months, within 12 months of closing reporting date. Then such kind of creditors for goods and services shall be treated as trade payables. So trade payables means creditors for goods and services as well as bills payable. Next one, other current liabilities like creditors for expense, outstanding expense. Means creditors other than for goods and services, outstanding salary, outstanding stationery expenses, etc. And hence these other current liabilities will be treated as residual head. Means current liabilities which are not best suited as short-term borrowings, trade payables, or short-term provisions. Then such kind of current liabilities will be known as other current liabilities. So now the question is that what is the meaning of short-term provisions? Provisions for 12 months. Simple one. Closing balance of provision for taxation. Simple example. We will go in detailing, but simple example. closing balance of provision for taxation. Now we will cover assets. There are two major headings of assets. First one, that is non-current assets. Non-current assets are assets which are going to realize, within 12 months? No, sir, you are wrong. Which are going to realize after 12 months of closing reporting date. Okay, if sir, any kind of assets which are going to realize within 12 months of closing reporting date, means of closing balance sheet date, then such kind of assets will be known as current assets. Okay, I am here talking about non-current assets, like building, like long-term investments. Building or long-term investments are going to realize after 12 months of closing reporting date. Okay, it's fine. There are various classifications of non-current assets like fixed assets. Under the fixed assets, there are various classifications. I told you that I will go in detail for each and every element. But right now, I am going to give only tangible assets. Number one, tangible assets. Okay. I told you that I am covering only head points. I will 100% go in detailing of each and every aspect. Okay, sir. Tangible assets like building, land, plant and machinery. I can touch the building, I can feel the building, and hence building, land, plant, machineries, all are tangible assets. But if I can't touch, but I can feel any asset, then such kind of assets will be known as intangible assets. Okay, sir, building under construction, it means as at date, means closing reporting date. Such kind of building is under construction. Then building under construction can be known as capital WIP, work in progress. In future, it may be possible that building may be constructed. When the building will be constructed, then in that year's last date, the capital WIP, means building under construction, will be transferred to tangible assets. Okay, sir. Computer software, but the commercialization of computer software is not done. It is pending. Then such kind of computer software can be treated on the last day, means the last day's closing balance, as intangible assets under development. Now, second element of non-current assets is nothing but non-current investments. very simple term, these are long-term investments, investment in shares or debentures of others company, means investment in other companies share or debentures. C, that is deferred tax assets as defined in Accounting Standard 22. D, long-term loans and advances like capital advances. If company may purchase any kind of non-current assets like fixed assets and give the advance that is for more than 12 months, that is for more than 12 months, then such kind of advance will be known as capital advance. So capital advance will be the part of long-term loans and advances. If company may give the amount of excise or custom duty in advance, that is for more than 12 months, then such kind of advance custom duty or advance excise duty shall be treated as security deposit. Security deposit is also the part of long-term loans and advances. Alright? Are you getting me? Okay. Thereafter, next subclassification of non-current assets, other non-current assets. Means any asset, any long-term asset may not be the part of fixed assets, non-current investments, deferred tax assets, long-term loans and advances, then such a kind of asset will be the part of residual head of non-current assets. That residual head is considered as other non-current assets. Now the question is that, sir, what is the second major heading of assets? That is current assets. Current assets are assets which are expected to realize, which are expected to realize within 12 months. Within 12 months of closing reporting date. Within 12 months of closing balance sheet date. Like debtors of goods. Okay, answer. I have given only one example. Cash and bank, liquid resources. Means current assets are those kind of assets which can be converted into cash, means liquid resources, very easily. If any kind of assets which cannot be converted into liquid resources in easy manner, then such kind of assets will be known as non-current assets. Okay, sir. Kindly classify current assets. There are various sub-points of current assets like current investments, short-term investments, any kind of investments that is for the short-term purpose. Inventories, closing stock, unsold goods, means those kind of goods are expected to realize in cash, means liquid resources within 12 months of closing the reporting date, closing balance sheet date. Trade receivables, very simple, debtors for goods. Next one, D, cash and cash equivalents, very simple. cash on hand and cash at bank. So what is the next one? Short-term loans and advances. This is nothing but closing balance of advance tax. Closing balance of advance tax. What? I will go in detailing. But right now, only the worry. Okay, sir. So you will cover maximum example. Am I right, sir? Yes, but obvious. Next one, other current assets. So other current assets means residual head. If any kind of current assets are not best suited as current investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, then such kind of current assets will be considered as other current assets. Interest receivable, dividend receivable, very simple. But obvious. Last one will give the total of asset side. I will give you the few times to revise, means I will give you 10 to 15 minutes to read all the elements, all the major heads and sub-classifications of equity and liabilities as well as assets, and thereafter I will ask you the major heads and sub-classifications of equity and liabilities as well as assets. Okay, now it is time to ask the questions. Okay, first of all, first question. Part 1 of Schedule 3, that is known as, yes Falak, kindly give the answer. Perfectly right, balance sheet. Could be included in the balance sheet, means what will be the major heads? Rakesh, please give the answer. Perfect. The ratio will be 4:2. The ratio regarding balance sheet, that is 4:2. 4 headings will be of equity and liabilities and 2 headings will be of assets. Nice. First heading of equity and liabilities, that is, yes, Ridit, kindly give the answer. Perfectly right, shareholders funds. And under the shareholders funds, there are 3 sub-classifications. First one, share capital. Second one, reserves and surplus. And third one, money received against share warrants. Okay, second major heading of equity and liabilities. Mahimna, give the answer. Perfectly right. That is share application money pending allotment. Who can give me the answer regarding what is the meaning of non-current assets, non-current liabilities, current liabilities? Riddhi, can you give me the answer? What is the meaning of non-current liabilities? Perfectly right. Non-current liabilities are liabilities which are expected to settle after 12 months. Very good. After 12 months means after 1 year. After 12 months means of closing reporting date. Under the head of non-current liabilities, first one, long-term borrowings. Very simple, like bank loan. Thereafter, State Finance Corporation loan. Thereafter, sir, debentures. Very simple. Thereafter, second one, deferred tax liabilities as per Accounting Standard 22. We will discuss about this deferred tax liabilities or deferred tax assets later on. Next one, other long-term liabilities means payables which are expected to pay, means settle after 12 months of closing reporting date. So this is the definition of non-current liabilities. No. But whatsoever it may be, the non-current liabilities which are not best suited as long-term borrowings, deferred tax liabilities, and long-term provisions, then such kind of non-current liabilities shall be considered as part of other long-term liabilities. Other long-term liabilities is very simple. Creditors for expense or creditors for goods and services, but for more than 12 months. Next one, long-term provisions. Long-term provisions regarding employees, like gratuity fund. Okay. Next one, current liabilities. Current liabilities are liabilities which are expected to settle within 12 months of closing reporting date. Okay, sir. Closing reporting date means closing balance sheet date. Okay, first one, short-term borrowings like bank overdraft, cash credit, working capital loans. Next one, trade payables. So trade payables means very simple, creditors. I'm repeating, creditors for goods and services. Creditors for goods and services. But this kind of creditors are expected to settle, is expected to pay within 12 months of closing reporting date. Okay, sir. Creditors for goods and services, bills payable. Yes. All will be the part of trade payables. Other current liabilities, sir. Other current liabilities means creditors for expenses. Creditors for expenses which are expected to settle within 12 months of closing reporting date. Closing reporting date means closing balance sheet date, like outstanding salary, outstanding income tax liabilities, etc. We will go in detailing afterwards, and I will explain each and every notes to account. Okay, next one, short-term provisions. Right now I am giving only one example. Provision for taxation, closing balance of provision for taxation. Detailing will cover afterwards. Right now I am only explaining you what is the meaning of these all kinds of elements, but only overview. Right now I am giving you overview of balance sheet. Next one, but obvious, total of equity and liability side. Yes, Rujita, can you give me the answer? Yes, first head, that is non-current assets, and second is current assets. Perfectly right. Who can give me the answer about what is the meaning of non-current assets? Yes. The guy with the white shirt. Harsh. Non-current assets are assets which are going to realize within 12 months, not within 12 months, that is after 12 months of closing reporting date, means of closing balance sheet date. Perfect. Well tried. Under the heading of non-current assets, there are various classifications. Means first one, fixed assets. Under the head of fixed assets, tangible assets, intangible assets, capital WIP, and intangible assets under development. Who can give me the answer regarding, sir? Yes, Kamlesh, can you give me the answer? Current assets are assets which are going to realize within 12 months of closing the reporting date, means closing balance sheet date. Super, very nice, Kamlesh. Okay, but various classifications of non-current assets which are pending, that is non-current investments, deferred tax, thereafter long-term loans and advances. Deferred tax means deferred tax assets here, deferred tax assets, long-term loans and advances, other non-current assets. And under the heading of current assets, there are various classifications: current investments, inventories, trade receivables, cash and cash equivalents, and short-term loans and advances. And last one, that is other current assets, residual head. Perfectly right. If there may be any kind of futuristic liability, not actual liability of current year, then it is obligation for the company to disclose such kind of contingent liabilities and commitments as footnote, not the part of balance sheet, not the part of financial statements, but as a part of footnote, like bills receivable discounted before maturity date, bills receivable discounted but before maturity date. Second one, preferential dividend in arrears. Many more examples of contingent liabilities and commitments that will cover up later on, but this is only and only for current purpose.